I want to welcome you folks to meet a new guest, Jeff Lutz. He's only been on the show about 50 or 60 years. I don't know. Hey, Jeff, thank you so much for dropping by again.
Yeah. How you doing? Hope everyone's doing well.
Yeah, listen, I think everybody's doing better than they were yesterday. So there's that. Jeff, you have been all over X today on tariffs. You and I have been talking about tariffs for weeks. And I would say that the entire market now is obsessed with tariffs. And I think if I was I'm going to try to put words in your mouth. I think that you think tariffs are a very big deal with regard to automotive, but maybe not a very big deal otherwise. Would that be fair?
No, no, I think tariffs are a big deal in general. I think our country literally has been getting, you use the term ripped off
Yeah.
for decades. And I've dealt in trade. I've set up manufacturing in, dozen, different countries or more, set up distribution in over 150 countries. And when you do that, you see what's required to import. And once you see what's required to import, it was very eye-opening to me. And when I was looking at this, I couldn't find a situation where the import tariff or the VAT or the quota or whatever those three things you encounter were more favorable than what that country would have to send. Sorry, the
Well,
US was not in a more favorable position than any of the countries that I can't think of one where the US was in a more favorable position in terms of us sending stuff to them versus them taking product, from another country. And so, yeah, I'm on board with it. It's just more of the management and how you get from point A to point B. I don't think this is 4D or 5D chess. I think that there is mismanagement, but I also think there is a plan. And the question is how can we get the plan and the management of that plan to converge? There's going to be mistakes. There's going to be issues when you're trying to take something like this and snap it back from where it's been for a long time. By the way, a lot of people don't realize if you go back and look at three of the major recent trade agreements in 2019 with Korea and Japan and 2020 with the USMCA, I mean, there was a lot of ground made up at the Trump, the prior Trump administration at their behest. There was significant ground made up in reciprocity, but there's still a lot to do.
yeah, a lot to do. So I'm gonna throw out an idea here, Jeff, because I do want to get to automotive, okay? Because that's the business we're in, or one of the many businesses we're in. But I want to throw out an idea that I came up with a little while ago, and threw it up on X, and that is that we might be at worst case tariff world right now. In other words, we're talking about 25% tariffs in Canada, talking about, at least reciprocal tariffs in Europe, talking about 10 to 20%, maybe a lot larger in China, but probably not. That these are probably and Europe's just come back with these big numbers, which if it's reciprocal, we would just put the same tariff on them. That right now, this is probably as bad as it could be because at 25% tariffs, there's no trade. I mean, basically, who has a 25% differential to where they wouldn't just be able to do everything in country, or at least within a year, somebody is going to be able to make it if there's a 25% differential. So I'm thinking this is as bad as it gets, and that therefore that the market might have actually gone up a little bit today because they realize this is as bad as it gets, and all it gets from here is better.
I mean, you can certainly take that perspective in two ways. One is exactly how you described it, and the other way is the market is going to start getting numb, like it did in 2018, to a lot of the Trump jawboning, whether it was tariffs then as well,
Right.
2017, 2018, and then the interest rates and what the Fed did in late 2018, and at some point, and the Fed was jawboning, and then they actually did rate hikes, and then Trump jawboned. But the market first off, there was a big drawdown actually. Uh, but I actually wrote an article on this. I posted an article on X maybe 6 weeks ago that the drawdowns were not significant in the Trump first administration when you step back and you had full historical perspective on it. But those tariffs and that rhetoric were different. So it was new to everybody, but it wasn't there wasn't 51st state rhetoric.
Yeah.
There wasn't, things like that. There wasn't threats to shut off the power
Right.
to 1.5 million. So this is certainly escalated rhetoric. But I am of the belief that at some point the market will become numb. What the market is concerned about is there some sort of runaway escalation? One, two. I will pick at your theory a bit, and we can go into the auto conversation.
Right.
If the 25% tariffs stay on Mexico, that will literally cause destruction of the U.S. auto industry. Literal. And this isn't like hyperbolic. Oh, you're making a hyperbolic statement. You're trying to get, this is why there was those frantic phone calls of the auto CEOs over a week ago, and this is why the Trump administration put those on and took them off right away. I mean, some of it you may think is 4D chess brinkmanship, trying to drive to a deal, but I mean the other side knows that it would be first off, it would be bad for Mexico. It would be bad. There's no question about it. It would be bad for Canada too. These tariffs. I mean, I wrote a little bit of a longer form post this morning about just U.S. and Canada, end state should actually be net lower tariffs, relative to January 19th, 2025. Like, could we get the net lower or net zero? That would be great. And take the quotas, to a meaningfully less, if not zero level. We can talk about that in a minute. But to pick out a little bit what you're saying, the U.S. auto industry gets a lot of the Ford, GM, Stellantis. They get a lot of their high dollar, high value, high labor content components out of Mexico. And if those things go up 25%, it is highly destructive to the business case to build those products in the U.S. and finish them in the U.S. Right now, today, for those components that come from Mexico, they are final assembled in the U.S. And those business cases would be stretched, if not destructed, because remember, a lot of conventional auto, a lot of their hardware margins are very, very small. If you've ever looked at them, they're only a couple $1,000s
Right.
On the mainstream vehicles, and they get the rest of their margins through their financing arm. They get the rest of their margins through these services contracts on warranties and tires and things that they do post sales. So it would be destructive. And then if you take the 25 to 33% of cars that they actually finish in Mexico, and you take a Ford Mach-E, and let's say that car is around $40,000 to build, and let's say they sell it for around 45 to 48, 50,000. If you say now that $40,000 car, tariff 25%, driving over the border is now $50,000. I mean, first off, they're already at a net massively negative EBIT margin, but now you take the hardware margins only, the unit economics at the device level only, and you take them to zero, you'd stop building Mach-E's.
Right. Right.
And then, then finally, then somebody says, well, just move it all to the U.S. If you move products in their current state as they're assembled today, at their current labor content today, at $2 to $10 an hour wages in Mexico, because they can't enforce the USMCA $16 minimum, but even if it was at 16, just assume it. And now you move it to $40 to $55 an average an hour labor in the US, it explodes. Again, it explodes. So these companies need time to not only move certain things, they can move certain things, lower dollar items that they can move and not be totally destroyed. But these higher dollar ones, they have to redesign how they make the product, and they almost need a new generation of product. So what I would advocate for the auto industry is you don't put 25% on April 2nd. What you do is you put 5% on, and you say every quarter this goes up 5%. And in 12 to 24 months, you need to have a plan to move, or you're going to be at, 50, whatever the math is on that 40+% tariffs on, and that would be, but now you give them a window with escalating tariffs. So you have the incentive to move the jobs back here, but you don't destroy the companies in progress.
Yeah, and so the other side of that, which is kind of where I'm coming from, is that even if you do it your way, a year from now or 2 years from now, Mexico and Canada are still their auto industries are destroyed. Are there a big part of their auto industry is destroyed? They've got people out of work. It's not really a good thing in terms of you don't want bad economies on your door, worse economies even than you have now on your doorstep. So it would seem like what we would be looking at is less than the 25%. There's a number where it does make sense to have some things that you're buying made in other countries because they're just better at it, or because they do have less expensive labor. But it's been too out of proportion, is what I think Trump is saying. And I don't think his goal is to put Mexico out of the car business, or Canada out of the car business, or Europe out of exporting anything to us, but rather to say we need more fairness. Let's find out where that number is. And he just does it, this method of coming in with all guns blazing, with the Black Hawk
Yeah.
helicopter coming over the hill,
Yeah.
and then backs
Well, I
down.
mean, some of that's for effect, it's not actionable. It's not operational. They need people in that commerce department that know how products are made, that know what time duration risk is, that know what these schedules could look like, both in product cycles and full redesign, as well as supply chain migration. And they need people in there that understand this stuff. If they had people that understood it, and they could have been overruled. I've seen these things multiple times where the principal, in this case Trump or Lutnick, says, we're going ahead, we're doing it. The boss says we're doing it. But if anybody knew anything, I mean, this was if this was implemented and if it stayed on, it would have destroyed the industries that they're trying to save. They
Right,
wouldn't have been there on the other side of it.
right,
They
right.
can't. By the way, they're kicked out of every country already. They're not competitive anymore in China. They're kicked out. That's the biggest growing auto industry. We're not shipping cars to Russia anymore. They're not competitive on the U.S. auto industry, and Western European are not really competitive on a global stage. So doing this and putting these tariffs on and making the inbound supply chain more expensive, not only does it destroy your domestic production, but it's going to destroy your whatever export
Or you
business
might have had,
you
yeah.
have, and you're going to put barriers on exporting to partners as well because they're going to raise their tariffs. I just don't think this was clearly thought through. I don't think this is clearly being communicated in terms of what's the end game. Is the end game zero tariffs? Is the end game just pure reciprocity? Because pure reciprocity isn't necessarily a good thing too in some of these situations. And then just finally, and I'm not going to, bore your listeners, but people should do investigations online and educate themselves on what these quotas are and how they work, and what VAT taxes are and how they work. Because there's countries that are hitting us multiple times, and there's people that want to jump on X. Apparently, they just want to defend everybody else fleecing us and just saying you don't know what a VAT is, or you can't conflate VAT and tariff. Of course you can't. But together they are more mutually destructive than they are as one by itself or one without the other. And if you have a country like China that has a VAT 17% on a lot of items, and they tariff you coming in, you got to understand that. And what a VAT means is basically is if you source locally within that country, they will relieve the VAT tax on the value of those components minus the conversion cost to actually build and assemble the product. So basically, the net tax on assembly of the product is lower if you're buying the stuff inside of that country.
Right.
But if you're a country and you're trying to have an export business and you're trying to export assemblies, guess what? That's a blocker. And then if you're already blocked on the full item as a tariff, you're even blocked, or you're your product is more expensive as a sub-assembly or as a complete product. But then when they put the VAT on, the VAT tells you that if you're not doing any transformation in that country, they're going to hit you again with another tax that would make you less competitive relative to the domestic partners. We don't do that in the US. We have other taxes, we have sales tax, but those are on consumption, not on construction.
Right. Yeah, and then and then there's the other two things, which there may be more than this, but you also have the country's ability to devalue their currency,
Yes,
and you also have the country's ability to put up subsidies, which we do also. So we do
we do.
subsidize and do things like that. But and yes, we could devalue our currency, but that is it has been a rare president who has wanted to devalue the American dollar, and certainly not this president. So anyway, with all that said, I do I have to I and watching Trump, and maybe you'll have a different opinion on this. In watching him these last few weeks, I have really been impressed by his understanding of these things. It may be that he's, you know, I may be trying to give him the benefit of the doubt in terms of playing 40 chess and whatnot, but I've been really impressed by the clarity with which he's able to speak about all of these different issues. Well, he's been building things in foreign countries for the last 40 years, 50 years, whatever it is. His dad was building stuff. I don't know if his dad built in foreign countries or not, but his dad was probably importing stuff when he was building stuff in the United States. So he knows import export just like you and I do. So he knows how these things work. So I think he has a full understanding, and I think he probably has a very clear end game in mind. And I think it's way less than the numbers that we're seeing now, but reciprocal. I think I like the idea of the reciprocal thing, with exceptions. So you start with reciprocal, and then, okay, we get it. We're never going to be able to make walnuts as good as you do. So, we'll give you, no tariff on walnuts. But by the way, you're never going to be able to make corn as well as we do. So maybe you'll want to give us a break on corn.
Yeah, they have a chance to save this. First off, I'm not as impressed as you.
Okay.
Trust me, I respect the what he's going after because it's something. I mean, you're talking Clydesdales and thoroughbreds in terms of this president's understanding of business versus the prior couple, who've never built anything, who've never run a business, who've had careers in politics, and that's fine. They're better at other things. We're not gonna compare the last 3 or 4 presidents, but I commend him and what he's going after, and I will give him some benefit of the doubt in terms of is there a broader strategy? Got it. I will. I can. Yeah. I'm not happy with how it's communicated. There's no excuse for that. And I don't think that's part of the 4D chess. My guess is if our current press secretary, who's very good at her job, if she could somehow split her time and be focused on how the April 2nd reciprocity package is going to be rolled out. Like, are we going to tell a story? Like, here's the story of the European Union. And here's what they do to us on tariffs and VATs. And here's here's an example product. And here's what we're proposing. Okay. And then put the two countries side by side, US, and like before we were kind of at a disadvantage, and what we would propose would be reciprocity, and we'd like it to go to zero. If somebody explains it in that manner, then this whole thing to me is recoverable, and the markets, quite frankly, would do quite well if they know the country is really focused on reciprocity and can communicate what they're doing, why they're doing it. Also shine a light on what we're going into, because most people say, I hate tariffs. They're terrible. Trump and tariffs, they just tie them together. They don't realize that we are in an existing regime of being tariffed to our eyeballs nonstop from other countries. So it's recoverable based on how this April 2nd thing rolls out. But man, between now and then, I mean, we're not done until it's the 51st state. All these commentaries is just not helpful. A U.S. Mexico economic tie-up is critical to take on China, I believe. I really believe that. When I look at what they have from both a mineral perspective, even a lumber perspective, I started studying the lumber and I'm not done and I'm not an expert,
China
but
or
just
China?
at, sorry,
China? I mean, sorry, Canada or Mexico?
Canada lumber.
Canada.
I just started studying it because we're hitting them pretty hard, and it's not clear to me. Basically we're saying is that they're heavily subsidized, but when I looked into it, it's all around this stumpy. That when I looked into it, it's just they have a lot more. The land demarcation of private versus public. We have a lot more expensive land that we're trying to log on, and that takes our cost structure up.
Mhm.
And here we're trying to penalize neighboring countries because they have less land costs to do the same work. So anyway, there's more to come on that. But anyway, just in general, I think April 2nd is a key date. And if it's communicated well, if there's some amount of de-escalation, and if there's any path to between now and April 2nd where a couple of the countries can come together, like Vietnam's coming here Friday. I mean, that trade imbalance has gone through the
Big.
roof.
Yeah, yeah.
Now, if he comes back and he says, "Look, I get it, and here's what we propose to take down our barriers from the U.S., and here's what and if that's an example of like we can get to reciprocal trade with a major country like Vietnam, who's taken on a lot of manufacturing, that would be a good sign. Getting a Canada deal or a Mexico deal or both would be a good sign before April 2nd. But if we roll into April 2nd and all this rhetoric is increasing, and now we're at 50%, in some tariffs, China just came back and put more on, and the EU just came back overnight and put more on. If we're just in this escalating regime, the markets can't read into the kind of nuance that maybe you and I are doing right now.
Yeah, no, I would agree with you. If the rhetoric continues, then we can't get the market back on the go. We can't be getting it up and to the right. And if it continues and gets worse, obviously the market is going to probably take a dive as a result of that.
And I don't think, Randy, you and I aren't saying don't do tariffs and don't defend our country because of the market. At least what I'm saying, and I think you're saying the same thing, is well, so I'll speak for myself. You can speak for yourself. It's the execution, the operational aspect of applying these tariffs and how they're communicated. It can be much more effective and be much more calming to markets where you still get the same economic impact, but you don't crush equity markets in the process.
Right, right, right. Let's switch to Tesla for a minute. China numbers. You
Yeah.
put up a big chart today about
Yeah.
China. The numbers looked okay this week,
Yeah.
but you had some thoughts about the overall market in China right now.
Yeah. I first off, I expected the numbers that came out, plus or minus 1,000. I expected some growth, basically. I shouldn't say minus 1,000. I expected some growth. I didn't expect 16 or 17,000 this week. When you're going through a ramp where you're changing out the old product and you're bringing in the new product, or you're just rolling out a brand new product, you're not going to get these huge weeks of increases. It's going to be a little bit more gradual because think about what you're doing in China. Think about the distribution network. Think about all the provinces. You just have product migrating over days and a couple of weeks to get from point A to point B. These things, this isn't a Star Trek episode where they're beaming, cars from one area of the country to another. So there's some linearity to it. So I expected this 13, 14K-ish number. And now I wouldn't be surprised of a 15K-ish or 15 to 16 in this next month, or sorry, this next week. And then, maybe 16 or 17, and then maybe 17 to 19. And that was a point. That was one point today that there'll be this gradual rise. But the other point in AJ, ALOJ is his Twitter handle. He does great work.
AL,
I know he's appears with you, Randy.
I love that.
And I just took some of his data that was in his subscriber feed that he then since published right away. And I just looked at one of the charts and he came to this conclusion. I just wanted to kind of blow it out and accentuate it for everyone, which was Tesla's relative strength in China. So everybody else is shipping cars domestically in China, BYD, Li Auto, so forth. The rate and growth of units over the last 2 weeks was, I mean, the other two, like BYD and Li Auto, there was retrenchment in one of the 2 weeks they had. They actually had fewer units in those weeks. So if you're looking at China macro auto and you're looking at, are they growing, are they steady, or they're declining, it basically what it shows is Tesla was missing their car. They were missing their new Model Y. And as soon as the new Model Y is inserted into the mix, they're back to this tick, tick, tick growth, and their relative growth is strong. See, if that data showed that BYD was growing at a similar percentage and Li Auto was growing at a similar percentage, you'd be like, okay, well, the market's growing and Tesla's got their new car. But the fact that they were actually not, and they were either flat or down, tells me that not only did Tesla, get their car and they finally have inventory of something to sell to people, but it also tells me that it's a good product and it could be, back to being on its way to being the number one selling product. And people should just be aware of the relative ASP difference between Tesla Model Ys in China and BYD's, where BYD's getting its volume. So people see the weekly volume of BYD of 57 to 60K, and then they see 15K on Tesla, and they're like, what gives? Well, the TAM accelerates as you go down tier in ASP, and their ASP is half of Tesla's.
Sure.
So anyway, the point of what's going on in China, I think the numbers are fine. I think they're growing. It showed that the Model Y transition was the reason for the January and February sales softness. And now that it comes back, it is outpacing the other leading vendors in China. And to me, that will be indicative. We will be able to cut and paste that regionally. It's not going to be 100% the same, but I think it will correlate.
Yeah, well, so let's talk about the Model Y more in general and about the United States, the Model Y in the United States. So wherever we're breaking out this new Model Y, we have people that are going to be replacing their old Model Y. I'm guessing that's going to be large numbers because it's a much better car. And if you bought the old Model Y, if you're like me, we have a Model Y. It's a good car, but we've had it for 4 years. That's kind of a normal time to turn over a car if you're well-to-do. And you also are looking at a car that is fixing some of the only little tiny things that you didn't like about it, like the rough ride or whatever. So I think there will be a large number of people that will be converting their old Model Y into a new Model Y. I've certainly heard that online. I've certainly run some polling on it. It looks like that's true. Then you've got the people that were Osborne who wanted to buy a new Model Y for whatever reason, and they were Osborne all last year. They're like, I want to get into the Tesla thing, but I'm not going to do it until this Juniper version comes out. So those two groups alone, they exist in China, they exist in Europe, they exist in Australia, they exist in the United States. So all the major places where we sell the cars, those two elements are going to be in place, which it would seem to me would be at least a couple of quarters of sales that you'd be able to sell all you can make.
Yeah. And we don't know about supply constraints. There were some rumblings of supply constraints in China. So that's the other thing of, unconstrained. They should be able, to get ramped up. But back to your point about replacement theory and so forth, in my experience in the past, and I know Tesla looks and others look at this, we don't even have to guess on this. There's data out there called Net Promoter Score, NPS. And the NPS for Tesla products is literally the highest in the industry. And it's not even close. I think it's 10 points above Rivian, and it's 20 to 40 points above typical other automobiles. And Model Y is not competing with Rivian at all. So you have a vehicle that's got a very high Net Promoter Score. And what Net Promoter Score is your willingness to recommend purchase of the product based on your experience, both for yourself and to others. And so when you have that high Net Promoter Score, and then you have a refresh like the Model Y where they did exactly what you described, they kept everything that everybody loved about the Model Y and they just made everything better instead of doing something very striking with the industrial design or with the cabin size. They did everything to kind of just optimize and up level. So that's what you do on a proper refresh where the original product is selling really well. I think they're executing on a product perspective perfectly. So yeah, this thing, the data, the net promoter score is my point, will say that this will be a hit because it's a high net promoter score on the number one selling vehicle in the world. And so unless we see something else new released that's really climbing up in the charts, which I'm not aware of what that is, then it should return to its former glory. And then let's see what these new lower cost vehicles have to bear.
So then I've been saying for, I don't know, 18 months or something that the largest unexploited TAM in the world for Tesla is Republicans in the United States. So the largest unexploited TAM in the world is Republicans. And actually, it turns out independents were not buying many Teslas either. So in the last 24 hours, we had this event
Yeah.
that may change. Well, first of all, I think it was already changing. I think Republicans were and conservatives and independents were already changing. They were already starting to look at Elon and Tesla because of his presence, because he's out there. He's making conservatives happy and independents that are tending towards MAGA happy. But then you add in the greatest PR event maybe in history yesterday. How much do you think I think it's an impact of like five Super Bowl ads, but what do you think?
I think it's significant, and I also think it's not well measured. And if you deal with people that are trying to predict Tesla volumes and they aren't considering this, you may just write them off as biased. Because I know there's people out there that measure Tesla volumes that have various accounts where they talk through this, and if they're not considering this as a net factor, and there is some decent data, there's a Morningstar poll out there showing the growth, and yeah, I agree, it's unexploited. There's money that's available to spend, and quite frankly, this political platform has done nothing but put anti-EV propaganda out there. It's terrible what some of the stuff, and now you have these same people on TV that have millions and millions of viewers that are saying like this car's unbelievable. They just weren't exposed,
Right.
and they were too busy, with a fire hose on EVs and why they're all bad. So yes, I think it's going to be meaningful. I also think there will be some measurable amount of loss, but I do think that that's contained at this point. And I also think it could be potentially recoverable in the future. We'll see. But so it's safe to say that it's a non-zero, like there's a non-zero impact to some amount of brand damage. It's very safe to say that there's also going to be some net gains. Maybe there's going to be gains and they may be net gains as a result of literally the number one, like the most powerful person in the world, the most viewed person in the world, buying his own Tesla and telling everybody how good these cars are. And then a lot of his surrogates are out there now doing it. And, quite frankly, Fox News, everybody's, makes fun of it, but they have in the 6 to 10 p.m. hour, they have almost 15 million people every night watching these shows. And you have one after another of these hosts that there's people that take everything they say verbatim,
Right.
and they're either buying their own car or they're recommending it. So yeah, I think it's meaningful.
Yeah. So then you add in what I've been also talking about for a long time is that when I buy my car for the first time, so I'm in the Midwest, I'm a conservative, rock-ribbed, Reagan conservative, now I'm MAGA. I go buy my car. What's the first thing I'm going to do? I'm going to show it to my neighbor. I'm going to show it to my friend. I'm going to show it to my family members.
Oh yeah.
And this time though, unlike when I did it in 1970, 19, in 2021, when I took it and showed it to my family, the full self-driving was a little weird, and they're like, "Oh, that was scary." But this time, if I'm the first time guy, I've never driven one of these before, and I take it out, and I show my friends and family, and I put it on full self-driving, they're going to look at a miracle. They're going to look at magic. They're going to look at something
Yeah.
that,
People are going to be stunned. I still show people today. I've often argued that the exposure rate can be of FSD measured in the fractions of a percent.
Yeah.
And when people see this, their jaws hit the floor because it's something you can buy as a consumer, and people are used to this, either not ever seeing it before or seeing it in movies, or it's a Waymo thing that some of them have experienced. So very few people have
Very few.
experienced those, by the way. So yeah, I mean, just imagine when one of these conservative influencers, whether it's Joe Rogan or, not saying he's conservative, he's more independent, but Sean Hannity or somebody, and they show their experience of full self-driving. I mean, yeah, this could be this could be a big moment. I mean, time and data will tell. And we also have a macro economy to deal with. That's why it would be great to not be destroying the value, the wealth effect in markets. I think there's something to that, especially with car purchases.
Mhm.
And so I would caution the president to. And by the way, what's interesting is the media only picks up on his negative commentary and they amplify it. But he was literally on the White House lawn. He was asked, "Do you think a recession's coming?" He goes, "No, I don't think a recession is coming. We're going to boom." That's what he said, like
Yeah.
verbatim. But that doesn't get picked up anywhere. What gets picked up are the him and hawing he had in the Maria Bartiromo interview this weekend. And that, quite frankly, I think that was the driver of the Monday sell-off.
I do too. I absolutely, well, that plus Besson. So
Yeah.
if we go to that, um, I've been saying for a while, 50-50 chance of recession. You and I may have discussed this before. So a recession is 2 quarters.
Yeah.
I think that I don't see how you can take $1 trillion out of the economy and not have some negative months or maybe a negative quarter. Negative quarter. Do you think that if we take $1 trillion out of the economy, and that's the only, and there's knock-on effects, right? There's a lot of knock-on effects from taking that $1 trillion out of the economy. Do you think we end up with 2 quarters of negative growth, or do you think that the drop in interest rates, the less regulations, the drive to pull manufacturing back into the U.S. and what that'll mean in terms of building some facilities and whatnot, do you think that starts to pick up soon enough to balance out and take us to the positive?
Yeah, I mean, people have been predicting recessions for 3 or 4 years. Every 6 months, there's somebody out there that says, "I think one's coming." And we had one. It was pretty shallow in 2022. The media just ignored it. It was the second and third quarter in 2022. We had 2 quarters of negative GDP, and the media just completely, not only they ignored it, they almost tried to redefine what a recession is.
Wikipedia did.
And sorry,
Wikipedia
yeah.
did change the definition.
Yeah, and that's why maybe Wikipedia's name should be changed too. But so my take is there could be, but I don't think it will be deep and dark like -5%, -4. It won't. We could dip negative, within a percent and a half, and then I think quickly recover
Off to the races.
because of the deregulation policies, because of lowering taxes and really having, but there is some underlying damage that this new regime has to deal with. I mean, we've never seen, I think, in the last 10 years, 25% of the non-farm payroll hiring being government hiring. We haven't seen that, and that's what's happened the last 2 years. That's phony. That's I mean, some of that is bridge building and some of that is infrastructure, and I respect that. But some of that is not. A lot of that isn't. And so, I mean, somebody needs to dig in and understand what's happening. But more so, there was actually underlying private sector weakness that was being masked by a lot of this hiring in the government sector. And quite frankly, not all these infrastructure jobs are government jobs, by the way, either. There's public-private partnerships. So for people out there trying to claim that, oh, you're not into infrastructure, well, these aren't all infrastructure jobs. Somebody should break down the 25%. Apparently, the media has been completely absent in doing this because if you're if your government jobs go from a nominal of 7 to 9% in employment ads per year to 25% over the last 2 years, you think it would have raised a couple of eyebrows and somebody would have done a couple of deep dives on it and put it out there, but nobody did.
And of course, that's what people also aren't talking about is that 25% that were taking the easy government jobs that were non-productive jobs, those people were not going into the economy, into the regular economy where they would have been productive, producing something, and might have kept the economy going even during that two quarters of recession.
Yeah, and again, not all of those jobs are non-productive, but I mean, somebody needs to go in and look at it. Yeah, I agree with your sentiment.
Yeah. All right. So then the last question of the day would be, all right, having said all that, what do you think happens with Mr. Market and Mr. Tesla as a stock in the next weeks, months?
Uh, I've told people this. So the markets are going to be disrupted. The VIX is, I don't know what it is right now, but it was over
Uh,
25 most of the day.
it went under 25 at the end of the day.
Okay, good. You need that to keep going. You need that to be below 20. Otherwise, you're not going to get sustained rallies. They tried to kill the rally today and you know, it recovered. That was actually a good sign, but we're not out of the woods. So this could chop for a period of time. As long as the president is chopping, the market will be chopping. And the question is are we going to chop sideways? Are we going to chop lower? Or is there some stability here? We've definitely hit some technical indicators going back to July of last year, going back to the April yen carry trade. So we've hit some technical things on the S&P. We got basically at around 10% on the S&P, and we got, I think, closer to 14, 15% on the NASDAQ. So some pretty hefty numbers. So yeah, I think it's going to be choppy as long as the president's choppy, but net higher by the end of the year. Again, unless we fall into some bigger problems with tariffs or escalating rhetoric or so forth, and then which I don't think we will, but there's definite risk here. And then on Tesla, the reason Tesla draws down so much is if the quarter was really good, like if the revenue was really good, the EPS was really good, the gross margins were really good, you'd have more of a backstop of like, okay, based on where 90+% of the revenue for the company's coming today, there's a backstop. We know that this thing is valued at 100x or more. I know it dipped recently, but we know this thing is valued much higher on autonomy and bots. And when that happens, and when you don't have the revenue now, you don't have the earnings now, when you get into these drawdowns, these high flyer stocks come under greater acceleration. I obviously think that the selling on Monday was highly overdone. It looks like the short interest jumped dramatic. It looks like everybody's jumping onto this news, and Tesla has that effect. It's highly traded, lots of volume. So Friday, Monday, all the protesting, all the violence, everything. By the way, I'm glad to see the domestic terror
Yeah.
designation. I think that's going to help stabilize some things, but we're not out of the woods. But I think Tesla, because it doesn't have that backstop, there's definite risk. But it's one of these things of, you know, if autonomy really starts hitting, and I think it will take all the way through Q2, just like it took all the way through Q2 last year for the market to realize Tesla wasn't lying about supply issues in first quarter. And Tesla told you they weren't lying in April of last year when they had the Q1 earnings, but nobody believed it. The stock really drew down. I think 75 to 140 something last year. So there could be some instability ahead. I'm not great at prognosticating day by day, you know, but I think, yeah, as long as the market's choppy, the president's choppy, and even Elon is kind of somewhat choppy in terms of his representation of things, the stock could be somewhat volatile. But again, even medium to longer term, I'm more than less bullish.
So are you in the Dan Ives camp, 600, 700 by the end of the year?
I thought he's in the 550 camp.
550, I think is his base case, but I think he said 3 trillion is his.
Well, you're gonna have to have a different market then. Have to be back in a bull
It's
market
gone. Yeah. Yeah.
because this morning We had exceptional CPI data, and the markets were concerned about inflation. I'm not saying it was the number one concern, but they were concerned. So we got exceptional data. We had the pre-market green, the rivers flowing green, and then the thing was literally drawn down to zero. And even, I don't know where the Dow ended, but it was highly negative throughout the day. So when you have that kind of activity where good news can't stick in the market, that is not the market for Tesla to go from 1 trillion to 3 trillion. So you're going to need some help from the market. I'm not saying a lot, but you can't have these destructive forces in the market spooking it. Whether it was the Fed before, now it's mostly not the Fed. Now you can't have the president, if he's comes out and he's constantly spooking markets, Tesla could have these cars, driving everywhere on the planet. And I think, I think it could be higher. I think you can't have, you need a bull market for something to run like this.
Right. Right. I said that was
Because remember, the robotaxi revenues and the Optimus revenues and real margins are going to come in year 2026 and 2027. What you're going to see this year is it's working, it's functioning, and it can scale.
Right. Right. So I said that was last question. I lied. Next Wednesday, when you and I meet again, it will be right after the Fed has made their decision. So what do you think? Do you think I'm now predicting 75 chance that they actually cut next week? They have all the excuses they need.
I would like to, but if they haven't, this Fed and this Fed chair does not like to surprise markets. So unless his Fed whisperers come out and start saying it here pretty soon, I think the base case is they're not going to cut. I'm not saying they're not late. Sorry?
Aren't they already in quiet mode? I don't think they speak.
Well, they are in quiet mode, but they have these whispers that come out in Wall Street Journal and so forth and say, oh, there's discussion of, X, Y, and Z, and Powell could do, and all of a sudden that's really just priming the markets that's what happens. So I think if they're going to change course, I think you would start hearing these whispers sooner than later. I'm not saying they can't start coming out Friday maybe and start whispering or Monday, but right now I think the base case is not to cut.
Okay. All right.
Even though I don't know. I mean, I think we could be late. It's arguable. This one's totally debatable.
Right. And quite frankly, I think that the 10-year is right now way more important than what the Fed does.
Yeah.
Like multiples more important than what the Fed does. The Fed move might help the 10-year to drop down. So I know I keep thinking of more things, but we have a huge amount of money that we have to raise in the bond market in the next 3 or 4 months. Do you think that is what's keeping these bonds up, the yields up?
Yeah.
Okay.
Well, there's risk, and then you've got. I mean, we're pissing off a lot of countries too, and how are our bond sales going to do on a global stage? I think there could be some could be assessing risk. I don't know.
Okay. All right. Okay. That's good. That's good. I'm glad I had a chance to ask you that. All right, Jeff, as always, we love having you every Wednesday night, and we'll see what happens over the next few days. Maybe they'll stop drawing on our cars.
Never a dull moment. Take care, Randy.
All right. Bye for now.
Bye.
Okay. So he was just asking what happened to the Dow today. Well, the Dow ended up down 82, which is, yeah, I'm having trouble again here. Down 0.2%. The NASDAQ ended up 1.22%, and the S&P ended up 0.5%. Tesla ended up 7.59%. So obviously that was not just because of the rest of the market. This was Tesla on its own going up a lot. But if you look a little lower on my list here, you go down to NVIDIA, who was up 6.43. And they didn't get a chance to have the president selling their chips on the front lawn of the White House yesterday. So at least part of this was due to the overall tech industry getting a bounce back. Okay, what do we got in terms of those bonds I just mentioned? The news was not what I would have expected today at all, and it ended up being the way it started. I see that we have not gone into The bond, we're too early to see what the bonds are doing now, but they ended up, the 10-year ended up at 4.316. So that is way above the 4.25, went up about 3 something basis points today. That is directionally not the way I'd like to see it going, of course. We've got oil up 7 cents in the pre-market, still sitting $67.75. That's very solid, very, very happy with that. Brent was up $1.35 today. It is sitting almost 71, which is fine. And natural gas continues down $1.40 in the pre-market, sitting at $4.02. We could easily be in the threes in the pre-market, and tomorrow maybe well into the threes, because you know how natural gas moves. Gold down a little bit, sitting at 29.43 though, so a solid number there. And silver really shooting for that 34. It's at 33.73. Down a little in the pre-market, but not much. Copper down at also 0.05, sitting at 487. But again, closing in on that $5 level. The Bitcoin is up a grand total of 384 today, sitting at 83,554. And the equities right now, the Dow's bouncing back. So we got a slight reversal. So the Dow's up slightly, 0.06%. S&P up 0.04%. NASDAQ is down, but you could call it flat. 0.01. Is that close enough to flat for you? Okay, so that's where things are right now as we conclude on a Wednesday night. I agree with Jeff, and I couldn't have been, I think, closer in our analysis. I do believe that we will see choppiness in all of the markets until there's more certainty. Could we go down into a full bear? Yes, but I don't see that happening without a significant negative news story. I mean, significant. Now, I did see a headline a little while ago that maybe Canada is selling some of their bonds, U.S. Treasury bonds. Again, I think I've mentioned this on X today. I'll mention it again. I think Canada's leadership, we're in a leadership crisis right now. So they already had terrible leadership, horrible leadership for the last, whatever it is, 7 years or something. Now they've just switched leaders, so they're in a leadership crisis. So they're making terrible decisions. The right way for Canada, the right way for Mexico, the right way for Europe is to take a look and just get Trump into the room and say, look, some of the stuff you're doing is, they've already said it. Several of them have already said, look, some of the stuff you're saying is right. Let's sit down and really, let's put this thing together. Let's figure it out. Let's do it in a way that's going to work out for everybody. Do we want to have no tariffs, or do we want to have small tariffs that are reciprocal? How are we going to do this? I'm sure that it will all work out. My expectation is that it might take until the end of April, but I think by the end of April, all of this will be behind us, and we will be off to the stock market will be off to the races. And what does that mean, off to the races? Well, some people have said up 15 by the end of the year. I think depending on productivity, depending on if all the wars end, could be a lot better than that. All right, so what have I got here? I've got Brian Wang on tonight. Oh my goodness, phenomenal show. Do not miss it. Okay, absolutely have to see that. Last night, as I mentioned earlier today, we had Brian White on, and that was also excellent. It was very, very good. So go back and take a look at that. In fact, I got Brian White, and also the show I did with Gibbs last night was the guy's a bright boy. Okay, so I'll put both of them up for you. And then other than that, we will see you again. And it's been great talking to you.